Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look on the gold market again. Yesterday was a bit tricky action, especially on the American session in the United States. And in fact, everything was technically absolutely normal, as we have suggested. And even the CPI report was in a row with the overall tendency, as numbers were better, and has supported the United States dollar and is pressed on the gold as an euro currency. And first release as we start dropping both markets. But a bit later we've got external hit from the publication of the Fed minutes, and that was decisive moment for markets. And yesterday, as it has supported and confirmed the idea of the coming tapering in the United States, that in the second moment that some members are concerned with the inflation is growing. This was an example when actually traders started to sell on the facts, so it triggered some closing of the shorts. It's because the information that markets were preparing to have been released, and since mostly this recent bearish action, especially on the Forex market, was in anticipation of this event, short-term traders had turned to the profit booking, and as a result you could see the jump here on the gold is on the Forex market as well. So, but in general, overall background and information that we've got recently stands against the United States dollar, because currently Fed fund futures rate suggests that the first trade could happen as soon as in July 2022. Its current probability stands 50-50. Although previously it was, if you remember, somewhere in the beginning of 2023. So the recent numbers and data move the possible rate change closer. So now this is the question whether this reliable background of this rally and whether it will be continued or not, because in general overall environment is not really bad for the United States dollar, and it seems that mostly technical risk, but we will see. Anyway, whatever it will be, yesterday we already said that while market stands below the lows of this Friday spike, bearish context will be valid. If not, we could change, market could probably shift to another pattern. And currently we have this scenario. So you can see this jump, market taking out of this top, now it stands at the very bottom on the daily chart. So nearest destination point that we could suggest based on the follow time frame chart, since here we have the hand and shoulders that we discussed previously, if you could see, it's better recognized in the tight chart. With this ABCD action stands around 1810 approximately. Its nearest is consolidations, also will be natural resistance area around it. So it means that market with this recent impulse that strong enough probably has chance to complete the 1810 area, to complete the OP, complete this head and shoulders. But whether this pattern will become something that triggered more extended rally, or it will be very short-term reaction, as a result we will get here some kind of the guardian steeple to sell maybe, and market will keep going lower, we will see later. But first, market should complete the momentum that right now exists by aiming and reaching of this destination point. So on the hourly chart, you could see that even with the COP release right here, it was in favor of the bearish context. So market complete our ABCD pattern that we discussed recently, if you remember. So we have considered all options that might be formed here, and we said to keep an eye on the few points. First in this top, then ABCD target here until it will be valid. Market will able to keep the bearish context, but if it will be broken, the market move higher. Well, that probably will mean that this is it. And once minutes have been released, this was triggering some upward action. So market right now stands at the very bottom. Maybe minor pullback will happen, but in the current circumstances, most preferable retracement target is 1776, because that agrees with the neckline approximately, and it follows by the context. So retracement should not be too significant, because rally just has started, market broken through the neckline and dropped back below it. This will be not a good sign. Theoretically, so it could be accepted, maybe 1765, 1767, just because it's very strong support. But in the current environment, if everything really stands bullish, the chances to reach this level is minimum. So I would suggest that to keep the purity of the bullish context, market should show retracement not deep than 1776 area, maybe even smaller with this minor A, B, C, D pattern. It's also possible. And then theoretically we should get the action to the 1810. So as you can see, overall environment is suitable only for scalp trading on intraday charts, because on a high time frame we still need something more, and it is still unclear what this rally will be, as I said, whether it will be straightforward reversal and deeper and stronger upward action, or just temporal reaction on the technical factors, position, bearish position closing among the speculators. So we will see it, I think, in the few sessions.